Hi everyone and welcome to today's video. Today we are going to dive into the current market correction in India and how I have selected two mutual funds to analyze their past behavior. As you may know, the Indian stock market has recently experienced a significant correction. This has been driven by various factors including global economic, trade tension, domestic policy changes. Despite of the short-term volatility of market, experts believe that these corrections often present strong buying opportunity for the long-term investors. Now let's talk about how I have approached this situation. To make informed investment decision, I have selected two mutual funds to analyze their past performance and behavior during previous market correction. So let's go one by one. So I have selected two mutual funds over here: SBI Small Cap and Mirai Asset Large and Mid Cap Fund. So these data I got from investing.com. I'll attach the website URL. You can go and check the same. So if you go to the historical data and you can select the time period and you can select the time frame as monthly, then you can download all the historical data for that mutual fund. So this one I have gone for the space small cap regular fund because for the direct plan I could not get the data from 2013. So I have considered 12 years of data just to analyze how they have behaved in the past. So I went for the regular plan just to get the historical data. So you can see from 1st March 2013 to till date, basically the 1st February of 2025, we have the NAVs. So then I have assumed 1 lakh per month SIP for that month. So here I have assumed 1 lakh per month starting from 1st March 2013 to February 2025. And this I just divided into price by price to the invested SIP amount. So I got the unit allocated. So that's how I have calculated. So I have three sections here. So one is the pure SIP investment. The other one is the SIP with yearly one stop up. Then the third side is SIP with the market fall. Whenever the market was falling 20% or more than 20%, that amount I am investing here instead of doing that yearly basis. So I am accumulating over the years and investing once in 2 years or 3 years or maybe same year whenever the market falls by 20% and above. We'll compare how the returns varies. So as you can see here, uh, so by February 2025, the NAV price has gone up to 146.646, and this is the accumulated units for that month. So here I have taken this first set, which is purely SIP return. So these are coming exactly 12 years, 144 months, which will be 12 years. Total unit I accumulated, the addition of all these units I purchased in every month. Okay. So we'll go to the next set of data. So here I assumed 3 lakhs of lump sum every year apart from the SIP. So SIP is going up 1 lakh per month. So basically 12 lakhs per year. On top of that, every year, April, I assumed investment of 3 lakhs as a lump sum. So in that case, so the time period is same, 12 years. The total units accumulated, I have calculated the units. So here it is the sum of all units, and for that particular months when I'm doing the lump sum, so this is the units we are getting for that respective month. So I've added all. So this is a total unit, and here our total invested value is 1.77 CR, and the price for all the purchased units, if you're selling on February 2025, that will be 6.31 CR. So this is the difference we are getting if you are going with a simple SIP and one lump sum amount adding on every year. Okay. What I've done here, so instead of just blindly going with the lump sum of 3 lakhs every year on certain month, so with the oversmart approach, what have we have done? So we waited for the market fall. or 20% or more from last year peak. Then we're accumulating all these lump sum amounts. Then we're investing at once. Just for example, during this time, you see the SIP was going on, and there were two lump sum values I have invested for 2014 and 2015. These are just a lump sum of 2 times in 2 years on top of the SIP amount. But if you go with the oversmart approach, I'm not investing these 3 lakhs here. I'm keeping that in a liquid fund or somewhere else, and I'm waiting for the market correction. So here, suppose I got market correction more than 20%. So here I'm investing the accumulated 6 lakhs. Similarly, I have done the calculation till February 2025, but you'll be surprised with the accumulated price here. So this is with the smart approach. You see, the investment value is same 1.77 CR. Here the investment was also 1.77 CR, but see the price difference. It's actually we are getting more when we are just going with the simply SIP with a particular lump sum for a particular month, rather than smartly waiting for the market correction and investing all the accumulated money at once. So this is the gap you can see. This is with the smart approach. This is with just SIP with lump sum approach. Okay, so to prove the existing statistics, what we saw in SP small cap, I picked up Mirai Asset large and mid cap fund also, and this is also a regular plan because for the direct plan I could not get the historical data starting from 2013. So the assumption is the direct will be behaving same as regular, even better than that. So here we approached with the same approach. One is 1 lakh per month SIP. Next data set SIP with once lump sum in a particular month of that year. And third set is SIP with a smart approach when market is falling. So data is almost same structure as before. So we'll directly go to the result. So here also we are getting 12 years, 1 month, but I rounded it up to 12 years. So if you'll see the SIP amount, we invested 1.45 CR in last 12 years, and the final price, if you are considering February 2025 NAV, that's coming as 4.94 CR, roughly 5 CR. And with SIP and lump sum, the invested value is 1.7 CR, and the final value as per February 2025 NAV is coming as 6 CR, roughly. And with the extra smart approach, you see the difference. We are getting less than the systematic and systematic lump sum also. One is monthly SIPs we are doing systematically, and one is the lump sum we are doing systematically. But this is with the smart approach, waiting for the market correction and adding all the lump sum at once. You can do your own calculation and verification to this data also. This I have taken from value research, this historical data. I'll add these URLs in the comment section and video description. Please check on that. So whatever we just saw in the Excel, same thing I calculated in the SIP calculator. This is ET Money website. I've selected the space small cap fund. The investment value is 1 lakh. Time period is 12 years. So it's coming as 5.18 CR, and our calculated value was 5.2 CR. So it's nearly equal. The other thing you can notice here how the investment is growing. So once we're giving more time to the market, you can see the return on your investment. So on the 12th year, this big chunk is your return on your investment. Same thing I've done for the Mirai Asset mutual fund also. I've selected the Mirai Asset fund and 1 lakh per month SIP, 12 years duration, and the final value is 4.52 CR. I've used the value research SIP calculator for this one. And here one thing you can notice how the investment value is going in a straight line and your worth of the investment is going on a zigzag motion and it's going up. And one interesting thing you can see here in February 2020, the accumulated investment worth was 1.7 CR. Then it fell into 1.2 CR. But if you would have continued your SIP and stay invested, you could have covered all this amount and sitting on worth of 4.52 CR as of today. So this is the magic of compounding, and it's always be safe to stay for long in market. So in conclusion, it's always be better to in a systematic pattern, whether you're investing in monthly or on a particular month of the year. And yeah, if you have the extra lump sum amount or liquid fund or liquid cash, whenever the market is falling, you can add top up to that SIP. But it's always being a systematic plan. That's how we are getting the better return. And this is purely backtraced data, and we can guarantee the same thing in upcoming future. Based on these data, we can only assume, and I'm not a financial expert. Please consult your financial advisor before doing any kind of investment. Thank you for watching. If you find this video helpful, please like, share and subscribe. See you next time. Thank you.